Hi friends, welcome to this video where we talk about star patterns, which are very important reversal patterns. Star candle formation happens when you have a small body candle that is gapping away from big body candles. This kind of a formation is what we call as a star pattern. For example, let's say your stock is in a defined uptrend and you have huge green body candles being formed, and suddenly you see a gap up and a small body candle being formed. This formation is known as a star formation. In this particular scenario, when you have a prior uptrend and a star candle being formed, this is an indication that there is a bear pressure that might be building up, and the third candle is what you need to assess for confirmation of this view. Do note that unlike the other patterns, a star pattern also needs a confirmation candle. So it can be of two types, a bullish star pattern and a bearish star pattern. A bullish star pattern is also known as a morning star, and a bearish star pattern is also known as an evening star. Let's understand these further. Let's talk about the morning star, which is also a bullish star pattern. So in this particular scenario, your stock should be in a visible downtrend with huge red body candles being formed, and suddenly you see that the stock price opens gap down but converts itself into a small body or a base candle. And then the third follow-up candle is a bullish candle. This means that the bear pressure has now started getting exhausted and the bulls are now taking charge of the price action. So as you can see on my screen, you had a huge red body candle, which is a bearish candle. There is a gap down opening, and the gap down opening is not sustained and it converts into a small body candle. And the third candle or the confirmation candle is a bullish candle. This completes a morning star formation. In case this morning star candle or the star candle is similar to a doji candle, which means that the body of the candle is negligible and the open price is the same as the close price, then we call this variation a morning star doji formation. The interpretation remains the same. Let's look at an example to understand the morning star pattern. If you see on my screen, I have the chart of Delta Corporation on a weekly time frame. And as you can see, the stock was in a visible downtrend with huge red body candles being formed in the past 7 to 10 trading sessions. Suddenly, we saw a morning star kind of a formation here. The stock opened gap down, tried to go down, but the buyers came in and tried to overpower the sellers. This is the first instance where we got to know that the bear pressure might be ending as the bulls are trying to fight the bears. That is why you have a star doji formation. The third candle is the follow-up candle or the confirmation candle for me, which tells me that a green candle is formed and it is indicative of the fact that bulls have taken complete charge. And this is where we can assess or we can expect that the downtrend will take a pause or it will get converted into an uptrend. And as we expected, the stock prices started going higher, forming a higher top, higher bottom, higher top, higher bottom formation. So the star candle formation was a very good insight to the fact that the stock has bottomed out and there might be a consolidation or a correction of the downtrend. Now let's talk about the opposite scenario, which is known as the evening star candle. In case of an evening star candle, your stock is in a visible uptrend forming a higher top, higher bottom formation, and suddenly you see that the stock gaps up, but it is not able to sustain that gap and it's a small body candle being formed. Now you wait for the third candle or the confirmation candle, and if it turns out to be a bearish candle, it is indicative of the fact that the bull grip is now weakened and the bears have started taking control. Now the stock price might enter into a consolidation or a correction phase. This is what we have in our screen. We have a huge body green candle. There is a gap up opening and the candle formed for that particular period is a small body base candle, and the confirmation candle is a bearish candle. A slight variation of the evening star pattern can be an evening star doji, which means that the base candle or the star candle is like a doji candle with a negligible body or the open price almost as equal as the close price. Let's take an example to understand this further. On my screen, I have the chart of Tata Motors on a weekly time frame, And as you can see, the stock was in a visible uptrend, forming a higher top, higher bottom, higher top, higher bottom formation. And somewhere around this first highlighted zone is where I saw a evening star kind of a pattern being formed. Do note that this was a gap up opening which converted itself into a red candle, and it overlaps slightly with the previous period's green body candle. Although the typical definition of a star formation says that the bodies should not overlap, you need to be slightly flexible when you are talking about analyzing charts. You cannot always have book style formations. So this was the first indication, as I said, that the bears might be willing to take charge and the bull momentum might be fading. And here in the second highlighted zone, I was able to get a confirmation where I saw a proper book style evening star formation. The stock opened gap up, it transformed into an evening doji star, and the confirmation candle was a huge red body candle. This was a clear indication that this bull run is now not going to sustain and a bear run might kick in, leading to consolidation or correction in the stock price. If you had followed pure Western technicals using trend lines, you would have tried to take an entry around this level, but using the added advantage from candlesticks, you are able to define your entry somewhere at this level where the pattern formation was complete and you got a clear view or a clear indication that the trend is reversing. So this is how you can use candlesticks to your advantage, and if applied correctly with the technical tools that we have discussed and covered, you will be able to get fantastic results. Now let's quickly cover a few variations of this morning star and evening star pattern, which is known as your shooting star and inverted hammer. So as you can see on my screen, a shooting star is also very similar to an evening star formation. It is just that you have a huge upper shadow in case of a shooting star. The upper shadow is indicative of the fact that buyers tried to take the prices higher, but they were not able to succeed, and the sellers eventually managed to overpower the buyers. Conversely, in case of an inverted hammer, you see it during a downtrend. The buyers did try to take the price higher, but they were not able to succeed. This was the first indication that the bulls are now trying to take control back from the bears, and the bears are losing their momentum or grip in the stock price. And the third candle, which is the confirmation candle, attests this view that the bears have lost control and the bulls are back in the game. So this brings us to the end of this video where we have covered the star patterns. I hope you enjoyed the video and you will be able to practice this learning across various charts. Do remember, you start off with higher time frame charts and gradually and slowly move on to the lower time frame charts. Thank you and good luck.